It is 8:32 a.m. Pacific Daylight Time. It's the 21st day of April 2026, and this is episode 1304 of Bitcoin. And with me, your host, David Bennett, bringing you all the news about Bitcoin that you can use and other macro stuff from around the world. Honey, you have the con. That's how we're going to begin the day, with crypto scammers conning ships through the Strait of Hormuz. Shit you not, man. Oh, yeah, I mean, the brass balls it takes to just completely usurp a worldwide geopolitical clusterfuck and try to scam it. Honestly, I don't know whether to be impressed or angry. I think I'm going to go with impressed. And we'll continue the con stories as Arbitrum is in the news right after that. And then we're going to talk about the Bank of Korea. Their new governor is, I don't know, deciding to go down definitely not a sunny, well-lit path. Let's just say that. And then the Clarity Act. Is it in danger again? Who knows, man. There's somebody who wants to delay the whole thing for, reasons. And then in the second half of the show, prediction markets, again, with the Strait of Hormuz. And then losing your job to AI. Well, as if New York couldn't get more stupid, we've got a guy who wants to, you know what? We'll talk about it. I promise I'll bring it to you. And a grandson of mobster John Gotti has been sentenced because, crypto. And then Onramp has launched a finance platform, and that's going to round us out for the day's news. But first up, brass balls the size of small moons, man. Crypto scammers offer, quote, safe passage through Hormuz, and at least one ship may have been conned. And this is out of CoinDesk, written by Olivier Acuna. Ship owners are receiving fraudulent messages now, asking for crypto payments in exchange for safe passage across the Strait of Hormuz. And at least one ship may have been taken in, according to Reuters. Maersk's, a Greek maritime risk services company, issued a warning, saying that several shipping companies have received messages from scammers posing as Iranian authorities and asked for Bitcoin or USDT. The firm said that it believed at least one ship fell victim to the scam and was fired upon while trying to pass through the strait over the weekend, according to Reuters. Shipping traffic through the strait has largely been blocked by Iran since February the 28th, when the United States and Israel initiated a war on the Middle East country. According to Reuters, there are roughly 20,000 oil tankers. That's 20,000 oil tankers and other freighters stranded in the Gulf. Oh, a week ago, U.S. President Donald Trump ordered a naval blockade of the Strait of Hormuz and has since seized one Iranian vessel trying to evade the operation. On April the 9th, Tehran, which controls the choke point, proposed crypto tolls on vessels in exchange for safe transit. Hamid Hosseini, spokesperson for Iran's Oil, Gas, and Petrochemical Products Exporters Union, said that the crypto fees would likely be charged in Bitcoin. Maersk's, if that's how you pronounce it, issued its alert on Monday. Iran has not made any comment. Quote, these specific messages are a scam, Maersk said, assuring that the messages did not come from official Iranian sources. Quote, after providing the documents and assessing your eligibility by the Iranian security services, we will be able to determine the fee to be paid in cryptocurrency, BTC or USDT. Only then will your vessel be able to transit the strait unimpeded at the pre-agreed time, said the fraudulent message cited by Maersk, according to Reuters. The shipping company did not immediately respond to a CoinDesk request for comment. Oh man, this is awesome. I mean, think of it. A couple of dudes just chilling out. God only knows where they are. It could be anywhere in the world. And somehow or another, they start interrogating the interwebs for how to get a hold of these shipping companies and what the best lines of communication are to do that, and then fabricate messages from the Iranian government saying that, hey, pay us in Bitcoin. It is literally a phishing attempt on the scale of worldwide geopolitical risk. It's shipping companies this large through a strait where 1/5 of the world's oil supply goes to. And some dudes out there sitting there going, we can scam this. There's some way that we can scam this. And I wish I knew how much, well, actually, back up. I wish I knew for a fact whether or not that one ship and the shipping company behind it actually did pay the ransom or toll or whatever you want to call it. And if they did, and they were like, okay, well, we got free transit, and then all of a sudden they start getting fired upon. What's the look on the captain's face like? Dude, did we just get scammed? People have entirely too much time on their hands, linked alongside with entirely too much I don't give a fuck. All right, so Arbitrum freezes $71 million in Ether tied to Kelp DAO exploit. I told you about the Kelp DAO exploit yesterday. As we always do, we're getting fresh news about what the aftermath is. So this is out of CoinDesk, written by Shara Malwa, and she says, a chunk of the Kelp DAO is no longer going anywhere. Arbitrum's Security Council froze 30,766 ETH, worth roughly $71 million on Monday night, moving funds linked to Saturday's $292 million RS ETH exploit into an intermediary wallet that can only be accessed through further Arbitrum governance action. Yeah. Decentralized, anyone? Decentralized? Bueller. RS ETH is a liquid restaking token issued by Kelp DAO and represents a user's position in restaked Ether. The council said that it acted on law enforcement's input regarding the exploiter's identity and executed the freeze, quote, without impacting any Arbitrum users or applications, except for the guy who was trying to move the RS ETH, because that's still a user and it's supposed to be decentralized, but when the tide goes out, everybody gets to see who's swimming naked. Arbitrum is not decentralized. None of the platforms are in DeFi, and most, if not all, other cryptocurrencies. Only Bitcoin makes sense. Only Bitcoin can actually truly claim functional and true decentralized nature. All right? Anybody who tells you different either has no idea what they're talking about or they're lying to you. Arbitrum is clearly not decentralized. Let's continue. The transfer completed at 11:26 p.m. Eastern Time, April 20th, according to Arbitrum's statement on X. The stolen funds are no longer under the control of the address that originally held them. Let's pause again. Right now, many people within the sound of my voice may be thinking to themselves, yeah, but it's stolen property. You know, thank God these people are going to get their money back. I'm with you. I understand that. That's essentially wrapping the problem that you want to sell to people in, is it for to stop financing of terrorism, or is it for the children? It's that whole meme of wrapping the Christmas present in what kind of Christmas paper do you want it wrapped in? And the reason I say that is at one point or another, there won't be an actual crime committed. when Arbitrum and the rest of these DeFi protocols start freezing people's funds. It'll be because, I don't know, later on when we get social, more social credit scores, that you have too low of a social credit score and they just decide to freeze your shit. Because if they can freeze this dude's RS ETH on the Arbitrum platform, they can seize anybody's cryptocurrency that's on that same platform. And it ain't just Arbitrum that will do it, right? What you view as right and proper now, all it does is expose the fact that at one point or another in the future, they will be able to execute the exact same kind of crap on stuff that you don't agree with. The fact that they can do it at all is the problem. It's not the problem that this is stolen property. I get that part. The problem is the fact that they can do it at all. And that's the issue. Because at one point or another, something you do that you think is okay to do and actually functionally is to the rest of the world as of right now may not be that way tomorrow. And then law enforcement can pick up the phone and say, hey, you guys with your quote unquote decentralized platform, freeze this wallet address and everything in it. I'm just saying, man, this is why you want Bitcoin and nothing else. Continuing, the move recovers about a quarter of the total amount drained from Kelp's Layer 0 powered bridge on Saturday when attackers pulled 116,500 RS ETH by exploiting compromised verifier infrastructure, and Layer 0 attributed the attack with preliminary confidence to North Korea's Lazarus Group. Arbitrum is a Layer 2 blockchain, meaning the network is built on top of, guess what shitcoin? Ethereum. And it processes transactions, quote, more cheaply and settles them back to the main chain. Its Security Council is a group of elected signers with emergency powers to take protective action in exactly this kind of scenario. However, governance-level interventions on user funds remains rare and controversial because they introduce a degree of discretionary control over an otherwise permissionless network. That is a bullshit sentence. I'm going to read it again, and we're going to pull it the fuck apart. However, governance-level interventions on user funds remain rare and controversial because they introduce a degree of discretionary control over an otherwise permissionless network. It's either permissionless or it's not. There's no gray area here. It is either permissionless or it is not. To say an otherwise permissionless network is tantamount to lying through your teeth. The freeze leaves Kelp with a partial recovery option, in addition to whatever else law enforcement and chain tracking firms can claw back. It also escalates the ongoing dispute between Kelp and Layer 0 over who bears responsibility for the exploit, since any broader socialization of remaining losses now has a $71 million offset to work with before legal coordination, insurance, or treasury contributions come into play. Kelp has said it is coordinating with ecosystem partners on a recovery fund and weighing next steps on unpausing loss socialization and legal coordination with affected counterparties. Layer 0 has not publicly commented on the Arbitrum freeze. Whether more stolen funds can be frozen depends on where else the attacker moved RS ETH or its derivatives before consolidation, and whether other chains with similar emergency powers choose to act on the portions of the flow. It is a great unveiling. This entire article should be your wake-up call if you haven't woken up yet. That everything but Bitcoin is a scam. And I will say it for the people in the back that are thinking a particular thought. Well, then how would they freeze Satoshi's coins? Exactly. This is exactly the way that Bitcoiners used to think in the past was all about being confrontational to the very thing that they love. How is it that Jameson Lopp and Michael Saylor and Brian Armstrong from Coinbase, and God only knows who else that's freaking out about quantum shit, can even think about freezing Satoshi's coins because they're scared of somebody, quantum cracking that wallet because it's a really old wallet. It's definitely probably not quantum safe. The public keys are exposed, so therefore, if a quantum computer ever does come to pass, it can maybe, possibly figure out the private key that generated the public key, which is completely against what we think of as asymmetrical cryptography, but that's another story altogether. The only way, in my view, that they would be able to do this is with the initiation of a solid fork of Bitcoin. That they wouldn't, there's no real way to freeze those coins unless consensus rules can change or are changed. That's what's at issue with Bitcoin. Right now, the way Bitcoin is, you're not freezing those coins. A major change is going to have to occur in order for somebody like Jameson Lopp to realize his pathetic dream of freezing a user's coins on the Bitcoin network. With Arbitrum and all the rest of this garbage we were just going through, that's already there. This is exactly why you don't want to have anything ever to do with anything but Bitcoin, and fighting against making your voice heard against this BIP 110 business, or is it BIP 110 or BIP 360? I can't remember. It's whatever they want to do to change a little bit of Bitcoin, just enough to be able to freeze Satoshi's coins, which means that they can freeze other coins, which causes a major problem and a complete breakdown in the trust model and security model that is Bitcoin's main chain. Do not let this happen. Do not let this happen, please, for the love of God. Let's move on to Korea, where the Bank of Korea's new governor prioritizes CBDCs over stablecoins in the first policy address. And this is Stephen Graves out of Decrypt. Bank of Korea Governor Shin Hyun-song, who began his 4-year term Tuesday, delivered his very first address in office, prioritizing central bank digital currencies and bank-issued deposit tokens while omitting any mention at all of stablecoin. Per reports in local media, the governor opened his address by declaring, quote, "In this time of transition, we must ask again what the role of the central bank is," end quote. Shin stated that through the second phase of its retail CBDC and deposit token pilot, Project Hangang, the bank would increase the usability of CBDC and deposit tokens while also highlighting its role in cross-border tokenization effort Project Agora. The omission of stablecoins marks a shift from Shin's earlier position. During his confirmation hearings, he acknowledged a role for private stablecoins, stating that they would, quote, be able to coexist complementarily with competitively with deposit tokens and would play a sufficient role within the future currency ecosystem. Meanwhile, KRW1 debuted in February as South Korea's first fully regulated stablecoin through a partnership between crypto custody service provider BDAX and Wari Bank. The country's proposed Digital Asset Basic Act, which remains under legislative consideration, would set rules for digital assets, including stablecoin issuance. The governor's silence on stablecoins comes amid an ongoing tussle between ruling and opposition parties over stablecoin regulation. The Bank of Korea has been actively engaging with the digital currency debate, with Shin previously meeting with bank chiefs in mid-2025 as discussions intensified. In 2023, the central bank partnered with Samsung to explore offline CBDC payments, signaling its commitment to state-backed digital currency solutions. Beyond digital currencies, Shin outlined sweeping financial market reforms. The governor, who will chair his first policy meeting May the 28th, announced plans to actively promote the internationalization of the Korean won including pushing for 24-hour operation of the foreign exchange market and establishing an offshore yuan payment system, according to local reports. On monetary policy, Xin signaled caution after the central bank maintained its benchmark rate of 2.5% amid geopolitical uncertainties earlier this month. Quote, given the uncertainty in inflation and growth paths, monetary policy should be conducted in a cautious and flexible manner to ensure stability in prices and financial markets, Xin said. Okay, the fact that he omitted the word stablecoin, that's not really pricking my eyebrows that much. What's more problematic here is that CBDCs as a concept haven't gone completely away. I really do believe that eventually there will only be like maybe a very small handful of CBDCs, and that the United States will try to direct Tether and Circle to become the de facto foreign exchange currency of the world. And I don't mean replacing the dollar, because it's all going to be pegged to the dollar for Circle and Tether anyway. So the dollar's still there. They would just be shifting shifting its visibility a little bit, right? But South Korea getting into a CBDC ain't going to work. I mean, it's probably never going to work for a country like the United Kingdom. China was first out of the batting cage. So yeah, theirs is going strong, and it's probably not going to die. But so many other countries that have been saying that they're going to do a CBDC, I don't think so, man. I think y'all waited entirely too long, and stablecoin at this point has just got too many of its claws into the gazelle and is starting to yank it down. I think you're too late. Oh, well. How about some chocolate? For my friends at Bitcoin Beans, proof of cacao here on the Circle P. It's where I bring plebs with goods and services to other plebs just like you who want to buy those goods and services, but you will be buying in a Bitcoin, because if you're not selling in a Bitcoin, you're not in the Circle P. And Bitcoin Beans, makers of the finest chocolate I've ever had in my life, is in the Circle P. Invest in your health like you invest in Bitcoin. Cacao is a nutrient-dense superfood. Ladies and gentlemen, it is time to stop looking at chocolate like candy and start looking at it through the eyes of the older world. Chocolate is food, man. The only way it becomes candy is if you put a 5-pound bag of sugar into it. All right, that's all that's happening there. And maybe like a gallon of milk, although I like milk. I think milk is a good food. It's the sugar that actually ends up making it into a candy. But before we started doing that, did you know that chocolate, like the fermented, roasted, or fermented and then, harvested, fermented, dried, and then roasted cacao beans were used as currency in Mesoamerica? Because it was that valuable. That chocolate was that valuable. Like, internal wars in Mesoamerica were fought over regions that produced cacao. We don't have to do that, thankfully, anymore, because our friends at Bitcoin Beans craft 1-pound blocks of 100% pure cacao grown regeneratively in Colombia, and you pay for it in Bitcoin. There's no chemicals, there's no fiat, ain't no middlemen, just real food sourced with integrity and exchanged through proof of work. It contains magnesium, antioxidants, and theobromine for natural energy and mood support. Go get yourself some chocolate. Get yourself a 1-pound brick of this badass chocolate, and make sure you use the code BitcoinAnd to receive a 5% discount on regeneratively grown chocolate from Colombia. Use BitcoinAnd at bitcoinbeans.co. That's Bitcoin Beans, like cacao beans, bitcoinbeans.co, as in company, not com. .co, bitcoinbeans.co. Use the code BitcoinAnd to receive a 5% discount. United States Senator urges delay of the Clarity Act. God. They don't even want it marked up. That's what they're delaying here. They want to delay the Clarity Act Senate markup until May. Cointelegraph, a U.S. senator, has reportedly urged Senate Banking Chair Tim Scott to delay the markup for the crypto market structure bill until May, as banking and crypto reps need more time to resolve disagreements over stablecoin yield provisions. U.S. Republican Thom Tillis of North Carolina told reporters on Monday that he does not expect the Senate Banking Committee to mark up the legislation, also known as the Clarity Act, in April, and has recommended that Scott schedule it for next month, according to Punch Bowl News. Tillis, who has been leading discussions between crypto and banking members, reportedly told Scott, quote, "It's very important to me not to accelerate things, to hear everybody and give them a rational basis for what we do accept," end quote. Continued delays have sparked concern that the Clarity Act may not pass before the U.S. midterms in November, an event that U.S. Treasury Secretary Scott Bessent said could reverse momentum of the bill. Oh, it will, dude. If it doesn't pass before midterms, it's toast. I'm just saying, it will be toast simply because Trump wants it. Because Trump's losing the midterms. I'm calling balls and strikes. I'm not saying that he deserves to lose the midterms. I'm saying that he's already lost the midterms. This Iran business, pretty much the straw that broke the camel's back. And there's a whole bunch of other shit that people can rattle off too, but really, it's the war in Iran was pretty much the ace in the hole on that one. And if the Clarity Act is not passed before midterms, that thing is toast, simply because when the Democrats come into power, they're going to try to eviscerate anything that Trump ever did, anything that he likes, anything that he looked at and smiled at will probably be put into a landfill, because that's the attitude that these fucking juvenile children have with each other. And of course, me and you are caught in the middle of this playground bully crap. And they're bullying each other, right? I mean, it's like watching two bullies that clearly think that the other one is the weaker in the system, and they're both basically beating the living crap out of each other. It's embarrassing to watch. It's embarrassing, but whatever. Quote, "I think that if the Democrats were to take the House, which is far from my best case scenario, then the prospects of getting a deal done will just fall apart," Scott Bessent said in March. It comes the same day cryptocurrency advocacy group, the Digital Chamber, sent a letter to the Senate Banking Committee asking it to move the crypto market structure legislation forward to a Senate markup as soon as the calendar allows. The banking industry has raised concerns that allowing stablecoin yield could trigger significant deposit outflows from the traditional banking system, particularly at community banks. It argues that those banks may not have enough balance sheet flexibility to absorb such outflows without relying on higher cost wholesale funding. Meanwhile, Coinbase CEO Brian Armstrong and others have pushed for more favorable stablecoin provisions. Last month, members of the banking and crypto industries were reportedly close to agreeing on enabling stablecoin rewards tied to crypto activity on third-party crypto platforms, but not for passive balances. Yeah, they don't want you earning yield on savings accounts. That's sort of how that works out. The Digital Chamber noted it has now been more than 270 days since the House passed the Clarity Act with bipartisan support. Quote, "Clarity cannot wait," the Digital Chamber's Government Affairs Director Taylor Barr said, adding, quote, "More than 70 million Americans who have embraced digital assets deserve the regulatory clarity that they have waited to for far too long." Other members of the crypto industry have argued that moving the bill forward is more important than holding out for perfect terms. This thing is in such danger because of the banking lobby. And that's exactly what they want. They don't want they are out of position in Bitcoin and the rest of this entire field, especially in the stablecoin realm. They are so far out of position, all they can do is stall. And they have every intention later on, because if they don't get it by the midterms, they're not getting clarity for a while. Eventually it will happen because the banking lobby will finally go, okay, we've got our position set. We've got our infrastructure built. We finally have people trained up and we functionally know how to operate in this new environment. So let's go. They will do that. The only reason the banking lobby is having a problem right now is because they are out of position. That is it. That is all. That is why. Let's run the numbers. CNBC futures and commodities, energy all in the green today. So I don't know if we're dropping bombs on Iran yet. I don't see any breaking news banners on CNBC, so I guess not. But something's going on. And how do I know? Because Brent North Sea is up 2.5 points to 97.89. May West Texas Intermediate oil up 3.9% to 93.15 a barrel. Natural gas up 0.5 to $2.70 per 1,000 cubic feet, and gasoline is up $2 to $3.18 per gallon. And metals are all down. They're all in the red by quite an extent. Palladium down 1.5. Gold also down 1.5 to 47.59 and 6 dimes. Platinum is down 1 3/4 point, and silver is down the most, almost 4% to the downside, 76.99 per ounce. Copper is down 1/3. Ag is fully mixed today. The biggest loser is chocolate, 2.5% to the downside. Biggest winner is soybeans. Oh, yeah, soybean. 0.97% to the upside. Live cattle down 0.75%. Lean hogs up 1 1/4, and feeder cattle are down over 0.5. The S&P is down 1/3. NASDAQ essentially is flat. The Dow is down 1/4%, and the S&P Mini is down 1/3 of a point. And Bitcoin chilling out at $75,890 per coin. That's a $1.52 trillion market cap. And today we can get 16 ounces of our favorite shiny metal rock with our 1 Bitcoin, of which there are 20,018,754 and 1/4 of, and average fees per block are normal. There are about 32 blocks carrying 64,000 unconfirmed transactions waiting to clear at high priority rates of 2 sats per VByte. Low priorities get you in at 0.4. Hash rate is, if it will stop spinning, 991 exahashes per second. So we lost the zettahash handle. That's okay. It's more than enough protection on the Bitcoin network to go around. From Stupid Again, yesterday's episode of Bitcoin, and Nick Dose with 4,200 sats says 420 boost. Thank you, man. I appreciate that. Tulips with 1,000 says tulips. Strategy, building the future of money. 60% of the banks are getting their armies and infrastructure ready, and all the institutions are getting bullish as retail's interest goes down the toilet. Next, we will hear Jamie Dimon say, bear markets are for building. Thank you, Tulips. Permanerd with 210 says, no comment. You don't actually have to write that. Nick Dose with 195 says, cheers. Cheers, brother. And Noster Gang with 101 sats says, nothing. Literally, there's no words. That is a true no comment. That's the weather report. Welcome to part 2 of the news that you can use. Prediction markets expect prolonged Strait of Hormuz disruption, and oil traders are betting big. This is out of Decrypt. Jose Antonio Lanz is writing it. The world's most important oil choke point has been effectively shut down since late February, and traders are not expecting it to return to normal anytime soon. Excuse me. Traders on the prediction market Polymarket place odds at just 28% that shipping traffic returns to normal to the Strait of Hormuz by April the 30th, even after Iran and the U.S. declared a ceasefire and Tehran claimed to reopen the waterway. I got to pause right there for a sec. I gotta find out where this is coming from. Hold on. Let me see if I can get to it. Oh, no, it's not doing it. Okay, there is on Decrypt's website, they now basically always have a sidebar on the left-hand side. And it doesn't matter what story you're reading, you know, and sometimes they're related to the story you're reading, sometimes they're not. But there's always a prediction market, one prediction market on the side. And this one is a bet, because that's what a prediction market is, on the average ships transiting the Strait of Hormuz back above 15 before May. Okay, so the average ships transiting the Strait of Hormuz is back above 15 before May. That's the market. So they're talking about 15 ships on a daily basis transiting the Strait of Hormuz. Ladies and gentlemen, there used to be 130 ships a day transiting. Sometimes there was 150 ships a day transiting. This one is asking, will there be at least 15 ships before May? And the amount of people saying yes is 63%. So there's two data points here. The Polymarket's market is that it's just 28% that the shipping traffic returns to normal, and that would be 130 to 160 ships a day. Just 28%. Yet for 15 ships a day, 63% of people say yes, there will be at least 15 ships per day. And it's just, I just give you that so that you can kind of keep a mental model of some of these things that are going on. Let's continue. The reason? Ships are just still turning back. They're just going away. Video from vessel tracking firm Kepler shows tankers attempting to exit the strait and reversing course, while the world's largest shipping association, BIMCO, has advised vessels to avoid the area entirely, citing an uncleared mine threat. Oh, good Lord. The strait is not declared safe for transit at this point, BIMCO's chief security officer told CNBC. On paper, the Strait of Hormuz crisis began February 28 when the U.S. and Israel launched Operation Epic Fury. Let's see. We know what's happened in the past. The ceasefire announced, yada, yada, yada. Iran imposed crypto tolls and Bitcoin. Okay. All of that, they run through the brief history, and we've already done that. That's why I skipped it. That's the backdrop for a cluster of prediction market bets that are telling a consistent story. The disruption is far from over. On Myriad, the prediction platform launched by Decrypt's parent company Dastan, the crude oil direction market is pricing a 63.2% chance that Brent pumps to $120 a barrel versus 36.8% for a dump to $55. Yeah, I'm surprised there's that much odds on $55 oil. I don't see it either, guys. Anyway, it's worth noting that the odds of Brent oil spiking on Myriad have never been below 50%. There was a brief period of optimism back on April the 17th when the odds reached 50.9%, but the panic won out again, as it usually does during a war, and predictors increased their bets on oil going to new highs. A separate Myriad market asks whether the average number of ships transiting Hormuz will get back above 15 before May, and we just went through that. The odds lean 63% saying yes. Meanwhile, a third Myriad market suggests that there is a 70.5% chance that President Donald Trump announces the end of military operations against Iran before June. This is not what Trump seems to have in mind, as he just told reporters he will not be rushed to end the war, though June is still far enough away that it provides the market with some wiggle room. Taken together, the markets are sketching a scenario where some normalization comes, but slowly and certainly not cleanly. On Polymarket, the odds for Hormuz traffic to return to normal by May the 31st sits at 61%. Those odds increase to around 70% when the date is moved further to June 30. In other words, traders think the reopening of the Strait of Hormuz happens eventually, just not this month, and probably not without more drama along the way. The BIMCO warning remains in effect. IMF Port Watch, that's the International Monetary Fund's Port Watch, the resolution source for the polymarket market, requires a 7-day moving average of at least 60 vessel arrivals for the market to resolve to yes. Current data is nowhere near that threshold. The first date marker, April 30th, is just 10 days away. And the economic stakes are real. Dallas Fed research published in March estimates that a full quarter Hormuz closure could knock 2.9 percentage points off of annualized global gross domestic product growth in the second quarter of 2026 alone. The strait moves 1/5 of global oil and a comparable share of liquefied natural gas with no meaningful alternative route for most of that volume. Crypto traders have been navigating the chaos with particular creativity. As Decrypt reported in March, oil-linked perpetual futures on the DeFi platform Hyperliquid processed roughly $991 million in 24-hour volume during peak Hormuz tension compared to about $75,000. $991 million compared to $75,000 on Coinbase over the exact same time period. Always on, crypto markets have become a real-time pressure gauge for a crisis that doesn't care about trading hours. The prediction market angle itself has drawn scrutiny. Senator Chris Murphy raised alarms in early March after blockchain analytics firm Bubble Maps identified six suspected insider accounts that collectively made $1.2 million betting on United States strikes on Iran, with wallets funded and positions opened in the hours before explosions in Tehran. And that insider trading continues to this very day. I added that last bit in there. Don't blame Decrypt for saying that insider trading is still going on. It is. That's me, but that's me saying it. It is. Where's your proof, David? I don't have any. I'm not gonna. It's like I've seen way too many shorts and longs of regular equity markets and oil futures being done at the exact times that would make sense for somebody who knows exactly what's about to happen. Yes, insider trading is occurring. Am I there to witness it? Am I on the phone with the people that are actually doing it? No. But it's going on. Trust me. Now, artificial intelligence. We got to talk about it. Did you lose your job to AI? Well, a New York lawmaker proposes AI dividend stimulation. Jason Nelson from Decrypt.co's got it. As industry experts continue to warn that artificial intelligence could disrupt the global labor market, Alex Bors, a Democratic member of the New York State Assembly who is running for the U.S. Congress, has proposed an AI dividend, a policy that would provide payments to Americans if the technology significantly reduces employment. Bors announced the AI dividend on Monday in a post on X. The proposal would create a contingency payment program tied to economic signals that suggest automation is displacing workers. Quote, CEOs are openly warning that AI will significantly reduce white-collar employment. Forecasters project that 50% of jobs could be automated in the coming years, with entry-level positions especially vulnerable, the policy states. According to the AI dividend framework, triggers for payments include sustained declines in labor force participation, wage compression in affected sectors, or rapid increases in AI-driven productivity without corresponding job growth. If the triggers are met, then the program would distribute direct payments to Americans while also funding workforce transition programs, educational initiatives, and government oversight initiatives. I don't think learning to code is going to be the way out for these people this time. I'm just saying, while the framework aims to ensure that AI dividend activity is based on real-world conditions, not political discretion, It does not mention how much money each eligible American will receive or the frequency at which payments will go out. The policy comes as developers of major AI tools, including OpenAI CEO Sam Altman, Anthropic's Dario Amodei, Microsoft's Mustafa Suleyman, and Tesla and XAI CEO Elon Musk, warned that the technology could eliminate vast swaths of jobs and automate significant portions of human work. Quote, "What is striking to me about this AI boom is that it's bigger, it's broader, and it's moving faster than anything has before. Compared to previous technology changes, I'm a little bit more worried about the labor impact, simply because it's happening so fast that, yes, people will adapt, but they may not adapt fast enough." End quote. The document frames the proposal as preparation for that possibility rather than as a direct response to current economic conditions. Quote, "No one knows exactly how this is going to play out," the policy said. But what we do know is this. If artificial intelligence replaces a significant share of human labor, our current economic system is not prepared, end quote. Funding mechanisms. Yes, here we go. Where's the money going to come from? Funding mechanisms in the AI dividend framework include a tax on AI usage measured in tokens, equity warrants that would allow the federal government to purchase shares in major AI companies if their value rises significantly, and tax reforms that address incentives favoring capital investment over wages. Bohr's framework argues that designing policies that protect human workers before large-scale disruption occurs may be easier than attempting to redistribute economic gains later. The AI dividend, this is a quote, "The AI dividend is only possible if we act now. Once a small number of companies have accumulated extraordinary wealth and displaced workers across the economy, the political and practical window for creative policy closes." Is that like creative accounting? Creative policy? Anyway, quote, "Demanding stakes in companies after they have already captured the value is far harder than building smart structures today while the technology is still taking shape," end quote. The Office of Assembly Member Boers did not immediately respond to a request for comment. So they want to tax you. Well, okay. According to the way this particular article reads, because that's the information that I've got in front of me right now, it sounds like they want to tax me for using AI. Let's get back up to it. Funding mechanisms. The AI dividend framework will include a tax on artificial intelligence usage. Okay. Are the AI companies using AI? Is the AI company themselves a user of AI when they spin up the GPUs, plug them into power and, cool them with water and do all the things? Is that what they mean by AI usage? I don't think so. I think it means when I use AI, maybe I'm using AI because I lost my job to AI and I'm trying to find another job. And then I get taxed on using the AI that I need to use in order to not only learn how to use it, but to use it to find another job because I lost my job to AI, and yet I'm going to get a check in the mail of what? My own money back. How is this helpful? Yes, I know that's simplifying beyond the scope of a 6-year-old. I get that, but it's okay to simplify shit, because that's really where the base fucking problem is here. You literally want to tax me to give me money. You want to tax me because I'm using AI to give me money because I lost my job to AI, which is exactly why I'm using AI in the first fucking place, is to find a job that I lost so that I can get that job back because I lost it to AI and I'm using AI, and you're going to tax me for it and give me my money back. The other part of the funding mechanism is even more oblique and opaque, if you will. Equity warrants that would allow the federal government to purchase equity shares in major AI companies if their value rises significantly. And the third part is tax reforms that address incentives favoring capital investment over wages. So they want, if you're going to build, like, I don't know, if you're going to build something and it doesn't have to be AI based, let's say I build something and it's like, I don't know, a manufacturing plant. And he uses a little bit of AI, but the plant is basically robot run, right? And I can just use machine learning at that point. And the robots take the place of the workers. Well, that's capital investment. So I'm going to be taxed by opening a place that favors capital investment over wages. Okay, well, what's the cutoff? What if I put in a place that would cost me a hell of a lot more over a 10-year period to build than the wages for the 1,000 jobs over that same 10-year period that I create? Am I still going to be taxed on the capital investment because I valued it more than the wages of the jobs that I created? See, this is where all this shit gets really sticky. And then let's go back to the allowing the federal government to purchase shares in major AI companies if their value rises significantly. They basically want to be able to purchase bonds or warrants, if you will, that become vetted after the share price of a company becomes a certain point. That's what it sounds like to me. And that if for whatever reason they never really get the price, the share price that they want, it never, the AI company that they have a warrant on doesn't really get up, I don't know, whatever their strike price is, that they can get their money back by redeeming the warrants. So it's a no-lose scenario for the federal government. And the asymmetrical upside is ridiculous. Two things. This fucking thing ain't going nowhere. This bill isn't going anywhere at all. And it's ridiculous from the bottom up. There's nothing in this that makes any lick of sense, especially the part of taxing the user when they're using AI so that they can pay that same user because they lost their job to artificial intelligence. Every time I see circular logic, my brain starts to hurt. And my brain is basically gasping for air at this point. Let's move on to the grandson of mob boss John Gotti. He's been sentenced for funneling stolen COVID funds into crypto. Decrypt's Vismaya Villa is going to tell us all about the new Teflon Don. The grandson of one of America's most notorious crime figures has been sentenced to prison after he siphoned pandemic relief funds into crypto investments. An outcome experts say points to a pattern of opportunistic fraud during COVID-era aid programs. Is that like telling ships that you can pay them in Bitcoin for safe passage in Hormuz? Carmine Agnello, grandson of John Gotti, the former boss of the Gambino crime family, was sentenced to 15 months in prison for defrauding the Small Business Administration of roughly $1.1 million to the Economic Injury Disaster Loan Program, according to a statement from the U.S. Attorney's Office for the Eastern District of New York. Prosecutors said he diverted $420,000 of those funds into a crypto business instead of using the money to support his company. 420! He pleaded guilty in September 2024 to wire fraud and was also ordered to pay $1.26 million in restitution, serve 2 years of supervised release, and complete 100 hours of community service. Between April 2020 and November 2021, Agnello fraudulently applied for at least 3 economic injury disaster loans through his Jamaica, Queens-based business, Crown Auto Parts and Recycling LLC. I'm sorry I'm laughing so hard through all this because it's so gangster. I love it. He submitted false information about employee headcount and intended use of funds, according to the statement. Okay, let me pause here. Auto Parts and Recycling LLC. It's right out of the freaking Gambino family playbook, man. That and trash collection. Yeah, sanitation services. I'm serious, man. This is how these people launder their fucking money. Crown Auto Parts and Recycling. See, what's great about that is that that's a junkyard. That's essentially a junkyard. I know because my stepdad used to own a junkyard, and one of his major income revenue streams was the 1,500 used cars that he had on his lot that basically people would go out with a couple of wrenches and find the car closest to their car that needed an alternator and go pull it off, and then they'd pay my stepdad like 15 bucks. The great thing about that is that inventory, and I've got my air quotes up, that inventory of 1,500 cars is about one of the most liquid things you'll ever see in your life. It is a more like a flow. When you actually witness how this model works, the inflow of cars and the outflow of cars, the car auctions, the car smashing, the people swiping parts and shit off the cars, it's all cash. Dude, Crown Auto Parts and Recycling Limited Liability Company submitting false information about employee headcount. Who would have guessed it? The SBA's Office of Inspector General estimated that more than $200 billion in potentially fraudulent loans were dispersed through COVID relief programs, with around $136 billion tied to EIDL alone. Experts told Decrypt that Angelo's case reflects a structural vulnerability baked into emergency relief design. The government prioritized speed, relaxed controls, and created what investigators have described as a kind of pay now, chase later environment. Money was pushed out fast, and serious verification often came much later. Isabella Chase, head of policy at EMEA and TRM Labs, called pandemic programs among the most significant fraud vectors that we have observed in recent years. Both experts pointed to how weak verification enabled the crypto pivot. Quote, the combination of unprecedented speed of disbursement, relaxed verification requirements, and rapid maturation of crypto markets created a near-perfect storm. Last month, federal prosecutors charged Los Angeles rideshare driver Bruce Choi with wire fraud and money laundering after he allegedly obtained more than $2 million in COVID loans for a fictional company called Premier Republic and wired the proceeds to crypto exchange Kraken. In October, a rural English glazer was sentenced to 22 months after securing not one but two COVID bounce-back loans and directing a portion toward crypto investments and gambling when only one loan was permitted. And then they go into the John Gotti family background. If you don't know who John Gotti is, dude, Teflon Don, they were after him for like 2 full decades. They finally got him in like 1993 or something like that and sent his ass to prison. I think he died in prison. I don't know. I don't give a shit. In either event, the nut doesn't fall too far from the tree. But here's the last thing that I'm going to say about all of this. This is more of a question. Is it possible that the United States government themselves enacted this not out of naivete, but they knew exactly what was going to happen because some members or sub-members or family members or people who knew people or friends of, etc., 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 to give them basically money for free? Hey, man, we're about to do this program. Make sure you're first in line. Dude, the fuck. I hate all of these people. Now back to one of my favorite cities in the world, Austin, Texas. Onramp launches finance platform combining cash, Bitcoin, and gold inside one account. Micah Zimmerman, Bitcoin Magazine. Onramp has launched a new platform that brings cash management, Bitcoin access, and gold ownership into a single account as financial firms compete to simplify long-term wealth. The Austin-based company announced today the debut of Onramp Finance, a unified platform designed for individuals and families focused on multi-decade wealth building. The product combines cash accounts offering up to 5% in rewards, Bitcoin brokerage across all 50 states, Bitcoin IRAs, direct gold ownership, and a spending card with cash back, according to statements seen by Bitcoin Magazine. Michael Tanguma, CEO, framed the launch around traditional wealth building principles rather than short-term market strategies. Quote, sound financial planning has always rested on a few simple ideas. Live on less than you make, put the rest into things that hold their value, and pass them on intelligently, he said. The platform groups its services into three core functions: earning, accumulating, and spending. Users can hold cash and receive rewards funded by Onramp, move funds into Bitcoin or gold, and use a card that returns up to 1.5% cash back. Onramp said that the platform is designed to address what it describes as fragmentation in financial services, where investors often rely on separate providers for banking, brokerage, custody, and retirement accounts. The launch also reflects broader shifts in how firms position Bitcoin within traditional financial planning. By pairing Bitcoin access with gold and cash management, Onramp is targeting users who view digital assets as part of a diversified, long-term portfolio rather than a speculative trade. The company has operated in Bitcoin custody and advisory services since 2023, working with individuals, financial advisors, and institutions. Its custody model spans multiple providers, including BitGo, Coinbase, CoinCover, and Tetra, with insurance coverage through Lloyd's of London. Not bad. Not bad. Onramp Finance also serves as an entry point into the firm's broader offerings, which include financial planning and inheritance structure tied to digital assets. All right, so that's all we need to know. Yeah, I know it's kind of an advertisement, out of Bitcoin Magazine, but what I find important about it's not that I find important about this particular company. It's about these companies in general, and I'm talking about things like River, Unchained Capital, Onramp. There's a couple of other ones that are basically Bitcoin focused, and they don't shitcoin, and most of them are actually centered in Austin, Texas, because Austin is, they escape the shitcoinery for the most part. But it's important to think about building wealth and passing wealth down to your offspring. And I think about this a lot, especially now with shit like AI. Robotics is coming next, and it will be fitted clearly with AI. And then after that, it's going to be quantum AI, which will then be the thinking cap for robots. Okay, quantum AI, don't dismiss that shit. I'm surprised I haven't seen more about it in news scaring the piss out of people, but it's just AI operating with quantum in the background. It's not that important right now. We're not nowhere close to quantum anyway, so I definitely wouldn't worry about quantum AI. I'm just saying, if there is a situation where even plumbers can't get work because robots are bipedal, they can go anywhere that a human can go. This is one of the problems with robots right now. They can't do that shit. This is the great thing about humans, and everything is built for humans right now. The way houses were built, the way buildings are built, the way cars are built, everything is built for humans to be able to work on, to fix, to build onto. Like plumbing in a pier and beam foundation type house. There's a crawl space. There is like 2 or 3 feet between the level of the ground and the top of the floor, right, in a house. That's room enough for a wiry, slender 18-year-old plumber's apprentice to crawl through the muck and fix a pipe. Robots can't do that right now, but they will. See, this is the problem. They will. And they will also be able to weld at weird angles because they will be built sort of like human beings are built. They will be able to get around things. They will be able to plop down a perfect bead of weld. Electronics assembly. It's all going away, man. So what's my kid supposed to do? What are my children supposed to do? I mean, are we all going to be professional investors? Because that sounds really fucking boring. So I would like my kids, if they can't, if what I think is going to happen actually does happen, I don't want my kids living under a bridge. But I also don't want them spending all the wealth that I can possibly leave behind to them, and because they're stupid about it. And my kids are not stupid, but dude, I'm sorry, if you're under 35, you're probably not as smart as you could be if you were over the age of 55, where you're like, hey, I know why this doesn't work. Ask me how I know. Because I tried it and it didn't work. That kind of shit. It's being wise. It's not about being smart. It's about having experience. But how do you fashion like a family trust, like the Kennedy family trust? The way that they did it, it looks more like a company. And the family members are basically hold shares in that company. How they distribute those shares, I don't know. That's probably private to the Kennedy family trust. But that's the way that they do it. And this sounds more and more to me like sort of a company. And I think about this shit all the time. You don't just hand your kids a wad of cash, like your life insurance policy. Let's say that you got $10 million life insurance policy because, you can afford the premiums. And you get whacked or somehow fall off a cliff, and the insurance company pays your two kids $5 million apiece in cash. No, the beneficiary of the insurance policy should be the family trust. And that there's a structured payout of the family trust. Maybe you do it to where your kids can only pay rent. That's the amount of money that they're ever going to get out of that family trust on a month-over-month basis is like $2,000. And the rest continuously gets reinvested. And more this is going to be AI driven itself. Automated rules, automated investing rules. Like you only dividend out to the family members of the trust no more than 20% unless these rules are met. That kind of shit's coming. And that's why these companies are important to keep an eye on, because you may need to call them and say, how do I structure my wealth in a way that isn't just passing on, my house to my kids, which they immediately put on the market, sell, get cash, and then buy something stupid like a Lambo. How do you guard against that? You guard against it with things like family trusts. That's how you do this. And companies like Onramp are the people that know how to do this. And since they're Bitcoin focused, these are the people that I would rather go to than somebody that is not Bitcoin focused. I want to see this sector of Bitcoin grow mighty and hearty and big and healthy, by the way. I'm just healthy, healthy growth, right? So think about that. Like what separate different ways can you think of to leave your wealth to your kids where there's no way they can be stupid with it, but it will help them, but it won't get them to the point where they just spend it, they just are listless and willful, not willful, like willless. They don't want to do anything. How do you structure that where they still have to fight, but they're not going to starve to death? How do you do that? What kind of people are you looking for in your corner to be able to structure this kind of thing? Because if you've got any kind of Bitcoin at all and you can wait it out, chances are good they might have an excellent future ahead of them. But until that time, I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.